Hello, good morning, everyone. My name is Layla Hashemi. I am the Director of Programs and Partnerships here at Women in International Security. It is a pleasure to join you today for this very timely and important discussion on blockchain and public trust. On behalf of WIIS, I'd like to extend our sincere thanks to the Embassy of the Principality of Liechtenstein for their partnership in convening this session. We are very grateful to Ambassador Georg Sparber and Lauren Metre and all of our speakers for helping to set the stage for today's dialogue. We are meeting at a moment where governments, financial institutions, technology innovators, civil society, and international organizations are navigating increasing complexity. Emerging technologies, including blockchain, digital finance, data systems, and new models of digital governance, hold significant potential to improve transparency, traceability, accountability, and efficiency across sectors. But technology alone does not create trust. Public trust depends on governance, transparency, interoperability, accountability, security, and a clear understanding of how these systems function in real-world institutional and societal contexts. And this is where public-private partnerships become especially important. So today's discussion, with that in mind, will explore not only technological innovation, but also the practical questions that accompany this. How do we responsibly build and scale these systems? How do we balance innovation and governance? How do we build confidence among institutions, markets, and the public? And what lessons can we draw from international experiences, emerging policy frameworks, and industry practices? So we are very fortunate to have an outstanding group of speakers bringing perspectives from technology, policy, finance, and governance. With that, I'm delighted to begin our conversation. So it is my pleasure to introduce our opening speakers. First, we have Dr. Lauren Van Metre, our incredible president and CEO of WIIS, whose work has long focused on governance, peace building, and complex international challenges. Following Lauren, we are honored to hear from His Excellency Ambassador Georg Sparber, Ambassador of the Principality of Liechtenstein to the United States. And with that, Lauren, over to you.
Thank you so much, Layla. Good morning, good afternoon, good evening. A sincere welcome and thank you for attending our event. For those who may be new to Women in International Security, or WIIS, we are a global network of women leaders working to advance peace, security, and inclusive peacemaking. Policymaking, we have 15,000 members globally. We have over 30 affiliates in Europe, Africa, Asia, and Latin America. As the security landscape has evolved, so has WIIS's mission and mandate. Alongside our longstanding focus on conflict prevention, women, peace, and security, and international affairs, we are increasingly turning our attention to hybrid threats, illicit networks, corruption, disinformation, and the technologies that are reshaping both democracy and authoritarianism. So this discussion today is both central and essential to our new institutional focus. When most people hear the word blockchain, I think they think, including myself, think about Bitcoin, cryptocurrencies, financial speculation. But we think blockchain is really about something much more fundamental. It's about public trust. And we think that in an era of hybrid threats, public trust may be increasingly one of the defining security issues of our time. We see in our democracies that we're confronting disinformation, foreign interference, corruption, cyber attacks, and declining public confidence and trust in our institutions. At the same time, authoritarian actors are becoming increasingly adept at exploiting technology to strengthen control, evade sanctions, conceal illicit activity, and frankly, to undermine our own democratic governance and public trust. So in this context, I think blockchain presents a really interesting paradox. On the one hand, we see blockchain-based systems can serve authoritarian interests, and we see this around the world. Cryptocurrency networks can facilitate sanctions evasion and illicit financial flows. Russia has used cryptocurrency and digital financial networks to help blunt the impact of sanctions and fund its war on Ukraine. North Korea has used cyber theft and cryptocurrency to generate revenue for its weapons programs. We've also seen blockchain enable supply chains, increasing surveillance and control over workers and producers. Digital identity systems can become instruments of monitoring and social control, as we've seen in China, which has integrated digital technologies into broader systems of monitoring and social management. Blockchain also offers another possibility. It can create trusted digital infrastructures that make information more transparent, transactions more accountable, and governance more resilient. It can provide auditable records of public spending, improve transparency in procurement, and frankly, I think for us, one of the most exciting prospects is it helps citizens become more activists, to verify information rather than simply trust institutions at their word. And so this is where we think Liechtenstein offers an especially valuable example. And you're going to hear about this today through its leadership on blockchain governance and initiatives such as the Trust Integrity Network. Liechtenstein has focused on how trusted digital systems can strengthen transparency and integrity. I would actually say that it has been a pioneer in treating blockchain not simply as a financial technology, but as a trust technology. So for WIIS, this conversation is part of a broader effort to understand how emerging technologies can either strengthen democratic resilience or be exploited by authoritarian actors. And as we expand our work on hybrid threats and illicit networks, we are seeking partners who are willing to explore innovative approaches to some of the most complex challenges facing democratic societies today. The Embassy of Liechtenstein has been really an important partner in this effort, and we are grateful for its willingness to engage in these conversations and help us all think about the future of trust, governance, and security. With that, I would love to turn the conversation and introductions over to Ambassador Georg Sparber, the representative from Liechtenstein to the United States.
Well, thank you so much for your warm words of our partnership, Lauren. It's really a great pleasure to be here, and thank you all for joining us today. WIIS really continues to be an outstanding partner for Liechtenstein in DC, but also, of course, has a reach, as you said, around the globe with its many thousands of members and affiliates. And we're extremely grateful to you for organizing today's discussion, in particular to Layla Hashemi, who brought together an outstanding panel of experts, including our very own Clara Guerra, who joins us from Liechtenstein today. The discussion is, of course, quite focused on fintech, but not only, as you said, Lauren, and it will be a springboard for a series of another meeting that will culminate here in an in-person conference in DC. So if you're interested in today's discussion, please stay tuned for that. You said it, Lauren, Liechtenstein has been sort of a front runner in the areas of blockchain and tokenization. A little bit over 6 years ago, we were the first country to pass and implement a national blockchain act. Its real technical name is the Trusted Technology Service Provider Act, which admittedly is a bit of a mouthful, but I think right there it's easy to understand that building public trust in this new frontier technology requires talking about it a little bit differently. Clara later will have much more accurate and expert things to say about what we are doing in this area, but to me, in my simple terms, what we're really talking about are secured and cloud-based digital ledgers, essentially a form of accounting and record keeping. It's a tool to streamline transactions and then maintain security and authentication, really. I think if people look at it more like this, that is where understanding and trust can be built. Like many tools, I think blockchain, you said it can be abused, and we've seen many cases of that already. But at the same time, there is these vast opportunities that can really greatly redefine how businesses and economies function, with the promise of transparency and more inclusivity, and really new economic opportunities as well. Goes without saying, absolutely, that protections are needed to put in place safeguards for all stakeholders. And the way I think about it, I think about blockchain like other radical technical transformations that humans have seen in their history. One example is if you look at the advent of fire into civilization. It's been essential to advance human civilization, no question, but at the same time, it can burn down your house without the right guardrails. And to develop the right guardrails, there needs to be a broad enough consensus that this is a technology that is here to stay and that it adds value to the future of our societies and economies. Without that, I think we'll remain in sort of a Wild West phase indefinitely, but that's why public-private partnerships are so essential to building that basic level of confidence and trust. Now, there's a few questions, of course. How is it that trust is defined and built really, and at what level? Is it institutional trust? Is it user trust? Is it market confidence maybe? And which are the concrete mechanisms that build it, such as transparency tools, auditability is important, governance models, accountability mechanisms. As Liechtenstein, I think we're proud to have been at the forefront of seeing the greater potential of the blockchain technology. To be honest, we've also had our fair share of difficult experiences in regulating it. Our goal has been to maintain freedom to innovate and provide a space for free market growth, but also providing legal certainties that protect and provide accountability for all stakeholders. I believe in hindsight that was the right approach, but I'm very eager to hear from the experts in the panel discussion how they look at things today, and at the potential also of regulation going forward that allows to continue to be innovative in this entirely new area of technology in the financial markets, but far beyond that. And with that, thank you again very much, and over to you, Layla, for the moderation of the panel discussion.
Thank you so much, Ambassador, and to Lauren for those thoughtful remarks and for framing both the opportunities and responsibilities, as the Ambassador mentioned, associated with trusted innovation and cross-section collaboration. We will now move to our panel discussion. I am truly pleased to be joined by an exceptional group of experts working at the forefront of not only blockchain, but also finance, governance, and public trust. Very short introductions. You can read more about our speakers on the event page. But our first panelist is Dr. Clara Guerra, a recognized expert working at the intersection of blockchain governance, innovation, and international policy dialogues. Dr. Guerra brings deep expertise helping bridge emerging technologies with practical governance and policy applications. So welcome, Clara. Next, we have, and I'm delighted to welcome Perianne, founder and CEO of the Digital Chamber and a leading voice on blockchain policy, digital assets, and technology advocacy. Perianne has been instrumental in advancing dialogue between policymakers, regulators, and industry stakeholders on the future of digital innovation. It's wonderful to have you with us. And finally, last but certainly not least, we have Lisa Schroeer. Lisa is from S&P Global. Her expertise brings an important perspective on global systems, markets, data, risk, and the evolving relationship between technology, trust, and institutional decision-making. So thank you, all of you, for being with us today. First, I sort of wanted to set the stage by asking if you could tell us briefly a bit more about your work, and then broadly set the scene and set the sort of foundation by asking about public trust. So we've been mentioning today, public trust is very central to our conversation, but it can mean very different things in different communities. So could you each please share from your perspective, what does public trust actually mean in the context of emerging technologies like blockchain and financial tech? And what are the most important ingredients to sort of build that, and why does it matter? So perhaps I'll go to you, Clara, first, if you may.
Thank you. Thank you very much, Layla. Thank you for the kind introduction and also for coordinating and convening this platform together with our embassy in Washington. So it's really an honor, pleasure to be here. Well, I lead the Office for Digital Innovation for the Liechtenstein government, which is subordinated to the Ministry of General Government Affairs and Finance, which means reporting to the Prime Minister directly. It is central government coordination and advisory consultancy body for the topics of digitalization, emerging technologies, and innovation policies. So my work, where I'm active, is really at the intersection of technology, governance, the market, and regulation. And of course, particularly in the areas of blockchain, digital assets, AI, and digital trust infrastructure. Also, just on the side, we are also responsible for the whole EU digitalization legal acts and programs, which is, of course, for Liechtenstein being a European Economic Area country and as such part of the European Economic Area and the EU single market, also a very, very important part of our work at the Office for Digital Innovation. Well, Liechtenstein is a very small state, obviously, and we learned that we cannot compete on size, but we can compete on agility and clarity, and also the ability to bring government, regulators, and the industry together and solve problems quickly and pragmatically. As Ambassador Sparber already mentioned, we were the first jurisdiction to introduce a comprehensive framework. It was not a crypto law, it was a framework, a comprehensive framework for the whole of the token economy, realizing not just the potential in the technology, but that actually ultimately parts of the future financial markets will be underpinned by the technology, and not just the financial market, but also the digital economy as such. And for that, it needs legal clarity. It needs consumer protection, legal clarity for the investors. It needs that but also for the market players and for the consumers ultimately as well, and also for the government, because we need to really make clear how these new technologies are functioning with our existing systems, or whether, and this was the case in that situation, it actually is such a complete new paradigm that we need completely new rules, and not just to tweak the old ones to make that a foundation where innovation is not suffocated but actually enabled, and also with that maybe against the very often held belief that innovation can hinder, that regulation can hinder innovation, to show that actually it's the opposite. If and when done right, regulation can actually enable innovation, especially in highly regulated fields like in the financial market. And what your question about public trust, I completely agree. It's that has so many different facets, and I think people come from it from different perspectives with a lot of different expectations. But I believe many people think of confidence in technology, and I think it's actually something completely different. So trust is really about that the systems can continue to work. So it's like some kind of digital architecture, survival architecture, so that when things go wrong, be that when there's a threat on a physical level or on a digital level, that the systems can still work, that the markets remain fair, that also the institutions remain capable of acting, and ultimately also that rights can remain enforceable. And that ultimately that the technology is strengthening society rather than weakening it, because for all its sophistication and for all its speed and all the good things that technology is bringing, but very often we see that, okay, where despite the speed and where despite the capability, where is the accountability, where is the transparency, and how can trust actually be anchored and relied on when dealing, when interacting with that. And so that is just a quick introduction and first framing from my side. Thank you.
Thank you so much, Clara, and thank you for sort of emphasizing this often the trade-off between almost like interoperability and innovation that I think we'll talk much more about today. Thank you so much. Perianne, can I pass it to you to answer the question?
Yeah, thank you so much. I'm Perianne Boring. I'm the founder and chairman of the Digital Chamber. We are a nonprofit organization that's advocating for the acceptance and use of digital assets and blockchain-based technologies. We were founded in 2014, so we've been at the forefront of these conversations since the earliest days of the introduction and advent of this technology. We're headquartered in Washington, D.C., and a lot of our work is focused around working directly with our policymakers and regulators, predominantly with the U.S. federal government, but we also work with state and local governments, and we do have some degree of interaction with jurisdictions all around the world. We've had some really productive conversations with Clara and her team in Liechtenstein. As she mentioned, they were really one of the first jurisdictions to create purpose-fit regulations for digital assets. So we all have a huge degree of gratitude for Liechtenstein for being leaders in this space, pioneering, and it's given us the opportunity to learn so much about what the right rules to the road look like for digital assets. So your question was around public trust and how do we apply the concept of public trust to blockchain technology? I would counter that with an open source, permissionless blockchain systems. You don't actually need trust because they're open. It's open source technology. Anybody can review the code, audit the code, verify the code. This doesn't require trust. This is a big part of the paradigm shift that we're seeing with the advent of this technology, where we no longer need to put such a huge reliance on centralized intermediaries. That goes in the financial system, but also in technology systems overall, where you don't have that centralized point of trust that you must have, but it also can be a point of failure. So blockchain technology allows us to verify, we don't have to trust, and that introduces a very high degree of efficiency, cost cutting, and savings for the end users, and it also enhances security. Security of systems that we use to move and verify assets and things of value over the internet. Again, how we think about this is not predominantly just around financial services. So many of the conversations that we have about digital assets, about blockchain technology, we're thinking about it in the financial services context. We think about this as critical digital infrastructure where we can use these rails similar to how we use the rails of the internet, where we're facilitating all sorts of information. Here we're facilitating and transferring many different types of value and data. So that can be financial data, but that can also be personal identifiable information. That can be records, that can be communications, but in a secured space. So this is not just financial services. This is how we move things of value around the world in a verified way, in a more secure way, in a more efficient way.
Thank you so much for that, Perianne. And I really I appreciate you sort of flipping the question on its head and making the argument that trust is really baked into the technology itself, and so it's sort of a answers the question quite well. And thank you for bringing your real policy impact. Of course, at WIIS, we really appreciate that and the perspective of going beyond finance, which is definitely what we're trying to do with this series. So thank you. Lisa, I'll pass it off to you.
Great. Well, I will bring it back to finance. So just for this, for my example. So my name is Lisa, and thank you very much for having me today. It's an honor to be included in this conversation. I'll be bringing my perspective on blockchain through the eyes of finance for today. I'm at S&P Global Ratings, and that's a division of S&P Global. It provides independent assessments of the ability and willingness of issuers to meet their financial obligations. But in this scenario, we've also broadened our risk frameworks into the digital assets space. I work in our methodologies department, and I focus on digital assets in part. And methodologies is this great department within S&P where we really build the analytic frameworks that are used for the ratings and for other assessments. So after many years in public finance, which is sort of the crux of governance in me, which has also been something that sparked my interest in digital assets. I spent the last 4 to 5 years working in this space, and one of the biggest things that I started off with was stable coins. And that's something hopefully we'll get to talk about a little bit later. And more so now, this evolution of tokenization. And we've been able to rate tokenized funds. We've been able to rate decentralized protocols. And I think our role continues to expand to remove information asymmetries. I think one of the things is that decentralized finance or digital assets, it's a new set of words, it's a new set of risks. And so I think that S&P has space here to help understand that. And one of the first papers I wrote when exploring this space was called "What Can You Trust in a Trustless System?" And it was a way for me to begin getting familiar with what's the same and what's different. And it's actually a very academic space for me. I get to think about it in the sense of what is the crux of industry, community, and oversight, and what are the correct balances among those. Having studied public policy, economics, and international finance, I mean, this is like an intellectual playground in many ways. So what is the right balance? And so when I think about trust, there's trust in institutions, intermediaries, but also is there trust? Can I trust what I'm seeing is true? Do you actually have this information? Is the information I'm looking at accurate? And although decentralized public permissionless blockchains reduce reliance on intermediaries in a traditional sense, there's still some material trust assumptions and dependencies. So it's important that we understand the technology and the risk for concentration, even in public permissionless blockchains, from validators to consensus mechanisms. And so I think that's something that the new vocabulary is important to understand. And open source code is an amazing invention. Everybody gets to see what is underlying the blockchains that you are using. But it also means that everybody might be using the same code. So if there is some error somewhere there, how do you have any protections? And in the world of finance, that may, for institutions, be very important in terms of having technical safeguards. And I think that's been one of the very interesting evolutions of this space. If you ever watch, these crime thrillers, now I feel like there are people checking, the contracts and tracing this money live. And I think that this sort of auditing has become much more prevalent. It's very interesting listening to people who trace this money. So anyway, I think for me, the big picture about DeFi, digital assets, is there's a lot of opportunity here. Faster, easier, removing people, removing centralization, but also thinking about the balance between security, centralization, and scalability. And that's one of the things that this industry has been dealing with for a long time. And so I look forward to hearing about all the policy innovations, because I think that's really where the next step is. I think the technology has been great. I think depending on what your choices are between the trilemma, you can find a blockchain that meets your needs. Do you want super decentralized? Do you want very fast? But the question is, how can people feel secure taking this leap if some of the risks do materialize? So I think that's a very interesting space. Looking forward to the conversation.
Thank you so much, Lisa. Lisa, I appreciate you highlighting that we have a new set of language, rules, and risks, and that we need to find the right balance. Although we are in this era of abundant opportunity, as you mentioned. Excellent. So thank you, everyone, for that sort of intro framing of the discussion. I'd like to move into some individual questions for our speakers. So Clara, I'll start with you, if that's okay. Clara, much of your work sits at the intersection of technology, innovation, governance, and international dialogue. As we've been talking about today, Liechtenstein has become a very important reference point for many of us on blockchain governance and regulatory innovation. So Claire, from your perspective, what lessons can governments learn about fostering innovation while maintaining trust, accountability, and regulatory credibility?
Certainly a great question. And I think a bit building on what Perianne said, I think it's true. I mean, this technology, it carries the promise of being a trustless technology, so that we don't need to rely on intermediaries, that you can trust the technology itself. However, I believe that only the technology alone, just as such, is not really creating trust. So we even call it also the trusted technology, but trust follows understanding. And what we have learned, or one of the big lessons that I can share, is that we still need rights that create actually trust with this technology, that the consumers can rely on, that the investors can rely on, so that it can be enforceable and is not just building on this technology, because this technology still, Jane and John Doe do not properly understand the inner workings of this, and they shouldn't. But still, it is for them. It is what does it mean? So how can they benefit from that? What does that mean for them in practice? And that ultimately means that when they have a digital asset, and this digital asset represents a real world right, like an asset like a car or a house or whatever, that they can execute that right, and that has value in the real world for them as well. So, but on the other side, I think the mindset of the regulator is super important, because independently of whatever the text says or whatever the regulation says, it comes a lot down to interpretation, implementation, and application. So I think that is very important, that also there we need a lot of competence and understanding also on side of the authorities to trust how these technologies are working, how the risks of these technologies are being managed, and how the interpretation and how the application is being used in practice. And I think we also see that now very well in the US with the Genius Act and the hopefully upcoming Clarity Act, that how well we saw the shift from what it meant, an attitude change on the side of the regulation on the regulator, and then what it still means to bring on regulation, and then the third step is to how this regulation is actually implemented and applied by the competent supervisory authorities. And then lastly, thirdly, and I think this is also very, very clear, this is an inherent cross-border, seamless, across jurisdictions working technology. So we do need international coordination and cooperation and dialogue. And I think, well, industry associations, they have been extremely helpful, but also the dialogue between governments and these associations and the markets, as well as between the governments themselves, to help align on terminology, to help on shared standards. And I mean, ultimately, we see this transformation, this evolution from the internet of information to the internet of value. And I'm always liking to cite the moment in 1983 when in the internet world, the what's it called? No, TCP/IP. Always mix it up. TCP/IP standard was introduced that allowed for the internet to work seamlessly, internationally, globally, on a common shared standard that we could all agree on. And this is something that I'm still working on with my means to further understanding for that this is something that we need apart from regulation to enable the markets internationally, because this is where it's going, and that's what is needed to enable the digital economy and tokenized economy for an international cross-border functioning and yeah, markets.
Thank you so much, Lara, and I appreciate you mentioning that this is very much a cross-border or transnational issue, which requires very in-depth coordination, and that, like many other policies, not just blockchain, the implementation and the proper sort of enforcement of these common and shared standards. Thank you so much, Clara. Okay, I'm going to move on to Perianne next. So Perianne, you've spent years engaging policymakers, regulators, and industry leaders around blockchain and digital asset policy. The digital asset ecosystem has evolved rapidly and changing policy and regulatory debates. So from the industry perspective, Perianne, what do you see as the biggest barriers and opportunities for building sustainable public trust?
Yeah, it's a great question, and Clara did a good job of explaining how you have many different jurisdictions, and if different jurisdictions are all taking a different approach to how you regulate this borderless technology, that can create a lot of challenges for the companies that are looking to use the technology. And we see that here in the United States as well. We have 50 states. All of the digital asset trading platforms today, or the majority of them, are regulated by state law. So they have to go state by state by state to get their license to operate. And if you have a very different compliance obligation in one state versus the other, you can see very quickly how having 50 state regulators can be very costly and operationally quite challenging. So that has been a big part of the conversation with regulators, with policymakers, is getting everybody on the same page just to make this technology interoperable across state lines, international jurisdictions, so companies can truly use this at scale. That's a critically important part of the policy discussion. I would say, I mean, your question was really what is the biggest challenge to adoption, and we're about 15 years into this saga since Bitcoin was introduced, and it's been quite an interesting conversation. The reason why I founded the Digital Chamber is because it was pretty obvious to me that this technology was going to face some very significant challenges and battles. This is a disruptive technology. Today, we spend about $2 trillion globally to the financial system just to move our money around. That's just to say, hey, I would like to transfer my paycheck. I'm going to send some home to my parents in Nicaragua or wherever, and we're paying $2 trillion collectively a year just to move your money. Think about that. That's a very large and very real industry. With blockchain, you can bring that cost down to basically zero or near zero, and you can do it instantly. You don't have to wait multiple days for your money to be received wherever you're sending it. And it can be done, faster and cheaper. That's really what this is. That's at its core one of the most low-hanging fruit use cases, moving things of value around. That is creating some controversy because think about the institutions that sit in the middle and collect those $2 trillion in fees. To have that entire business line being obviated by this new permissionless technology that anybody can use for free, that's not going to go over super well or super fast for those who control that system today, which of course is the biggest banks and financial institutions globally. We saw this with the advent of the internet. If you remember, we used to pay for those who are over the age of 20, which includes me. we used to have to be very cognizant about calling our friends or our family members that live long distance, right? One of my friends met a nice guy, lived in the next town over. They ended up getting married. They spent a lot of time on the phone. They got in a lot of trouble with those long distance fees. We don't pay long distance fees anymore. Why is that? Because we have voice. We have voice over internet protocol. We can essentially have these conversations. We can have, we can do the same thing that we used to pay the phone carriers. We can do that essentially for free today with this new technology. So this is a normal technical cycle. These are very normal conversations that happen in history. But it is somewhat controversial. And so what I have seen as really the biggest challenge is you have some of those incumbents who do understand that this is going to be a challenge for our business in the future. We're going to have to evolve, and they want to slow it down. And you can't blame them for that. It's business. It's very predictable business activity. And some of those institutions are also quite powerful, and they have a lot of power in the political system, and they've used the political system to try to slow this technology down. And just think about that concept for a second. One thing that I've seen in our policy discussions that has been, I think, is very dangerous is the politicization of technology. This is just, it's software. It's ones and zeros. It's code. It's a language we use to facilitate the transfer of value over the internet, basically for free. The technology does not care if you sit on the left or you sit on the right. The technology does not care what your gender is. It does not care what your age is. It does not care where you live. It doesn't care whether you went to college or you don't have any degrees at all. Everyone is equal on chain, but we have taken this technology and we've pushed it into a political environment where you have politicians that have demonized it based on political views, not on this is technology, it's a tool, it can be used by anybody, and depending on who's using it, of course, it could be used for good or bad or just basic commercial purposes. So that politicization, I think, is one of the biggest barriers to advancing this technology. It's just really not helpful to turn this into a political conversation. This is about technology. We've worked so hard at the Digital Chamber to try to keep this nonpartisan, make sure we're talking to people on all sides of the aisle, provide education, provide information, but this is not something that should be used for a political gain or used for a political purpose because it's just technology. And going hand in hand with that is also disinformation. There is a lot of misinformation, and I do believe intentional disinformation that's been used to harm the credibility of this technology, to scare people to not want to use it. For the same purpose I mentioned at the beginning, which is ultimately this technology is going to disrupt some very powerful systems. And the more that can be slowed down, that's going to protect those existing systems. Again, it's very predictable. It's business activity. We can't blame them for having that position. But at the end of the day, this is a technology that is going to create all sorts of benefits, particularly for people, for just average people who need to send things of value online. It's going to make it cheaper to do that, more efficient to do that, and there'll be more security baked into the system. So that's really the conversation we've been trying to push so hard in our policy conversations, and not making this about policy. And that honestly, like that human aspect is probably the biggest challenge that we face on a daily basis.
Thank you so much, Perianne. I very much appreciate your technology agnostic or technology neutral point of view. I think that's something that we all share on the panel, is that not inherently bad or good. And also, I really appreciate the for temporal time context of the sort of evolution of globalization, the increased access that we have in terms of like voice over internet protocol, but also like texting. I think of storage often, how storage used to be very expensive or very limited, and now we have this very we are resource rich to a certain extent. So there's a lot of opportunity there, and then definitely appreciate the disinformation angle as well. Excellent. So I will take this moment to just mention to our audience, who are all listening, that you can type in the Q&A. I should have said that much earlier as we talk, and then I will move on to Lisa for our last individual question. So Lisa, I'd love to bring you in from the perspective of global markets, risk, and data ecosystems. Organizations increasingly rely on trusted information, analytics, and interoperable systems, as we've been talking about, to navigate these complex global environments. So Lisa, for you, from a market intelligence and global systems perspective, where are you seeing the most promising or realistic, perhaps, applications of these technologies in finance or in supply chains?
Great. So, I think there's what I'm seeing today, and then there's sort of what could happen down the line. And so what I'm seeing today is, if you went to conferences a couple of years ago, everything was stable coins. And I think that has really solidified. I think the value of stable coin and the use of it has become much more I would say commonplace. I mean, in developed areas, we're less likely to use it to pay for coffee and such, but to pay for to send money across borders or to use for investments, you've seen an increase in that. And stablecoin has reached over 300 billion. Transaction volume in 2025 was 33 trillion, and in 2025 alone, it grew 50%ish around in market cap. So you're just seeing a large acceptance and growth in this area. And one of the things that I think is interesting about stablecoin, and one of the areas when we talk about transparency and trust, is that there are different types of stablecoins. And we've talked about the Genius Act on this panel and sort of the parameters for that transparency backed by paper dollars in banks, but there's also stable coins that are backed by tokenized funds, algorithmic, or crypto backed. And I think that even understanding that is important for the community, because I think when you see the word stable coin, people think that this is a token that should have a stable value, since that is in the name. And that's where another piece of I think regulation is helpful to provide some framework for what stable coins can be used by certain people, but also just allowing maybe also people to know what different types of stable coins there are. Some level of choice, depending on what your needs are, is an interesting consideration. And so I think that for now, what we're seeing is the rise of the institutionally acceptable stable coins, or the ones that are likely to be. But then there's Tether, and I think that Tether does not fit that sort of same framework, and it's extremely useful. It had first mover, and so we're seeing. We're going to see how that evolves. It'll be very interesting to see if the institutions start doing more digital bonds, and we're using stablecoin as payment rails. What happens with the different types of stablecoins? We're also seeing that this is, as mentioned, something that is being used for remittances, especially in emerging markets. And we did a little study on that to see, what it could mean for 45 emerging market countries. Did some scenarios. Is this going to have an impact on banks and their deposits? Our current estimations is that it wouldn't really be significant enough. So when you talk about these sort of powerful industries, it's interesting to see what really would be the impact, and is there room to work together, right? I mean, why wouldn't you want faster transactions? Why wouldn't you want to provide certain services? And I think that's a discussion that you are seeing, as some institutions are starting to have tokenized funds, some are using stablecoin. And so my thought is, rather than like a winner take all, I think we are starting to see some convergence, and a lot of the conversations at some of these conferences now are, how do we work together to get the best of both worlds, right? And maybe there'll be a section that is for finance and has more parameters, more policies, and then maybe there'll be another section that doesn't need quite as much protection, and people choose which one makes more sense for them. But I think that you're starting to see institutions see the value of these faster transactions, of the liquidity, holding us up, as you mentioned, interoperability. So it's great to issue something, but if there's no secondary market, if there's risk every time you go on or off chain or across chain, that becomes another area that, if you're thinking about how much do you want to get in return for the risk that you're putting in, you have to think about each step on the chain. And so I think that that's something that you hear a lot as well. We need to find a better way to move on these chains. And I think the benefit of the blockchain is this fast movement, 24/7, seamless. And so how do we make that broader? It's lovely to have lots of different blockchains, and I don't think that necessarily has to go away, but we've got to mitigate the risk on the movement across those. And then, of course, when you talk about humans and policies, I think humans are problematic just across the board because they're also the people who are causing a lot of the cyber risks, right? So you can talk about problems in code and you find it and then you fix it, but you still have social engineering. And so it's going to be interesting. You have to educate people on a whole new type of scam, on a whole new type of social engineering. And so there's policy and problems over there, and then there's people and being vulnerable. So I think education continues to remain a key part of rolling this out. I mean, especially if you remember like when the internet came out and parents freaked out that I paid for something over the internet. Over time, you get more comfortable and you start to see it works. I've been protected. So I do think that we are going to see hopefully less combative stances and more integrating where it can, because if we don't work together, we're going to lose some of the benefits of what this technology can provide.
Thank you so much, Lisa. You mentioned a lot about, and I appreciate this discussion that we're having, which I think just noting how we need to have this be an ongoing conversation, and the ambassador and everyone was mentioning how we will have an in-person event in September, because we're just scratching the surface, I feel, in this conversation about the variety of use cases and applications of blockchain, and how I think unpacking that will really help this conversation that we're having around public trust, because with every opportunity and use case comes their different opportunities and risks. So this is very exciting. We only have a little bit of time left, so I would love to look to the future with all of you, moving back to all of our panelists, and ask sort of one more question, I think, before moving to some audience questions that I see. So looking ahead, and maybe we'll give it a 3 to 5 year time frame, what policy, governance, or partnership priorities, or I guess writ large priorities, would be most important for ensuring digital financial ecosystems are both innovative and trusted? Or another way we could say this is, what's the sort of single most important ingredient or thing for building the trusted systems moving forward? So I'll start with Clara, and then I'll move on to Perianne, and then Lisa.
Of course. Well, I would say first building digital trust infrastructures, which includes digital identity, verifiable credentials, and trusted data exchange, because it's not just about trusted technology, but verifiable trust. So that's from my point the first aspect. Second, as I mentioned already before, as a success ingredient and necessary for this cross-border acting technology, that we have stronger public-private collaboration and better collaboration even amongst also the states. So government alone don't own innovation, and also the industry doesn't own trust. We need both on both sides. So this is something that I believe in. And thirdly, interoperability. So these digital ecosystems increasingly operate across these borders, as we all know, and trust must do the same. So verifiable trust and credentials that travel across border as well, to anchor the trust in interactions with digital assets. So this is what I believe are the real challenges, that we're not building digital systems in silos, but that we build infrastructure that enable also the cross-border seamless transactions and working of the markets.
Thanks so much, Clara. Perianne?
When I think about what is the one thing we have to get right, it comes down to our fundamental freedoms as a society. At the end of the day, blockchain technology is open source software. And here in the US, open source software is protected under the First Amendment as free speech. It's a language that we use to communicate globally, and we use it to assemble in the digital ecosystem. It's really important that we do not pass any laws or regulations that would impact users' access to this technology, because that's a direct attack on our most fundamental freedom and right, which is the freedom of speech. So there should be no restrictions to people being able to self-custody, to people being able to have access to open software systems, open cryptocurrency systems. There should be no barriers in between users being able to use this technology on their own without having to go through a third party. And that also translates into tax law as well. Tax law is meant to encourage certain behaviors and actions. So it's important that tax policy and regulation also takes into account that there should be no anything hindering people's ability to use this technology in a free and open way. And that also would bridge into our right to privacy, our Fourth Amendment right. We do have a right to privacy. We do have a right to an expectation of privacy. And one of the things that comes with using Bitcoin or cryptocurrencies is that every single transaction is now on a public ledger. So, of course, there is no publicly identifiable information about users on the blockchain, but you do have a public key. So our right to privacy should also include our right to have privacy on chain. Using public keys and not our personal identifiable information should be sufficient for regulatory and compliance purposes to protect our privacy online. That also goes to the point of how this type of technology can be used for surveillance purposes. It's really important that we don't take the approach of China with a central bank digital currency where the state can see every single thing you are doing, every single transaction you are making, and cut you off if they decide that they don't like what you're buying or what you're doing with your own funds. So protecting our First Amendment and our Fourth Amendment rights of our freedom of speech, our freedom to use the technology, and our right to privacy, to me, those are the non-negotiables that we can't get wrong in policy and law. And then there's so many details on how do we create a regulatory environment for businesses to come in and use this technology in a commercial setting. There's so many different directions that can go. There's a lot of details to talk through, but as long as we're not impending some of our most important human rights, those other questions are secondary.
Thank you so much, Perianne. Lisa?
I'm going to go bigger picture. I think the biggest thing we need to do is have, I think interoperability and global sort of frameworks in the sense of facilitating the movement is very important. So I think that's one piece that if we want this to become a more a seamless transaction, it will be helpful to know what to expect when I send my money to one place or the other. But sort of more fundamentally, it would be great if the institutions and the more DeFi native members could come together and sort of get the best of both worlds. There are things that we've learned from traditional finance that would be great if we didn't replicate, because they weren't great for society, and they weren't great for members who participated. So let's take those learnings. But then there's also innovative things that are happening that could benefit on a larger scale. And so I think if we could really spend time figuring out what things are the most beneficial and merging them, that could take us to the next level. I think neither side is going to win on its own. So I think we really need to think about how to do it together.
Thank you so much to everyone for those kind of final remarks. And thank you for an incredibly rich discussion. So I will now open the conversation to our audience for questions. Feel free again to submit your questions in the Q&A. We don't have a chat because it's a webinar. As the questions come in, and I have a few that I'm going to ask, I encourage us to think not only about technology itself, but the broader ecosystem, as Lisa just mentioned. And I will ask them out of order. And this is specifically to Perianne about the disinformation. The question asker is curious about what the motivation behind this sort of disinformation would be for these actors committing this disinformation. And perhaps related question: can blockchain be a useful tool in combating disinformation and improving public trust?
Yeah, so regarding disinformation, I think the biggest efforts of disinformation have been perpetuated by legacy systems that are going to be obviated by this technology. They have an incentive to want to slow this down. They have an incentive to confuse people. They have an incentive to tarnish the reputation of this technology because they're protecting their legacy systems that will be disrupted by this new open source technology of blockchain, but it's also coming from the political environment. So I think a lot of those actors also as well have very deep, powerful controls with politicians. And so they have been successful of recruiting politicians to take that message to Washington or to power circles around the world and turn it into a political conversation, which again is really harmful for the technology, which is the intent of the purpose of what they've done. And I think it's been pretty obvious, anybody paying attention over the past decade, that that's a big part of what we've seen in the public discourse around cryptocurrencies. What was the second part of the question?
So there's the motivation, and then can blockchain be used to build public trust or to combat disinformation? And then what would be the motivation of those actors to?
Yeah, I think it can. I think blockchain technology can be used. I think about it with the advent of AI and the introduction of AI, where this is again, there's a lot of, I think, disinformation towards AI. There's really a big effort to try to scare people about new technology, what people don't understand, they fear. A lot of people don't really understand AI, and I think we're all learning exactly how AI is going to impact our lives and our business because it is still very new. One of the big things that we're seeing is how you can create deep fakes, or you can create new images of someone that aren't correct or that aren't accurate, and that can be used to control or to manipulate an entire community or population. And then that can also be used to sway election results or business outcomes or really important decisions and things that happen in the business and the policy community. So how do people know if what they're looking at? I mean, even today, for people that use social media, if you're scrolling through Instagram or TikTok or whatever your platform is of choice, so much of the content is AI. How do you know? How do you know? Well, I believe we can use blockchains to verify where content is coming from. Who created that image? Can we verify who created that image? Is that image been altered or not? So I do think it can be used for that. I haven't really seen any company or startup build that in a way that could be used at scale, but it's certainly a use case that we've been talking about in the crypto AI tech community.
Thank you so much, Perry. And actually, we have a follow-on question that's very related, but Clara, yes, please.
Yeah, just to second on that, and I believe there has actually last year a new standard being introduced and published, suggesting that actually blockchain could be the preferred or one great solution to introduce trust in the AI operating system world. So there is definitely something that is being discussed, and also I know of some companies that are actually actively using that. How mature that is, and if that is already in like scaling and mass implementation status, I couldn't speak to that, but just saying there's really corroborating evidence and recommendation on a standard level to use that.
Thank you so much. This is very related, and the last audience question that we have is, what is the relationship, and this is to all of our panelists, what is the relationship between blockchain and AI? How can one benefit the other? And again, where does public trust fit? But we will stick with that, given Perianne's discussion of the relationship between blockchain and AI and how they might reinforce or benefit one another. And that's open floor to anyone who'd like to answer. I know Perianne already got us started.
Yeah, well, I mean, again, just on the same theme, I do think the Internet of Things is going to need a ledger of things, and in AI, there is a big issue of how do we verify what we're looking at, what we're receiving, how do we know where this information truly originated from, and has it been altered somewhere along the chain before I got it. So I think that's a really positive use case where we will see blockchain, again, I use the term digital critical infrastructure, where we will see this to create more trust, more security, more efficiencies in the digital economy. So while we spend a lot of time talking about crypto used in financial services circles, the application of this technology is definitely more broad beyond just a financial conversation.
Yeah. Now it really is about provenance, tracking, ensuring and ensure the authenticity and history of AI-generated content, improving information integrity, cryptographic also techniques like digital signatures or watermarking. They can provide verifiable trust in AI systems. So the list goes on in safeguarding contents against manipulation and unauthorized alterations. So to have that kind of proof of provenance and proof of that it has not been a certain data or data set, that it has not been manipulated throughout its life cycle. So this is something where I can see that blockchain can play a major part and a very important part. So just as if it would be the trust layer for AI operating systems, I think that is a strong claim and very possible to look into. So it's not just a cynical mix of buzzwords, throwing blockchain and AI in a mixer, in a blender, and hoping that there's something meaningful coming out of it. But there's really a lot of work going into analyzing that intersection and how these two technologies can benefit each other in securing information and data integrity.
Yeah, I don't think I have much to add. I think they can also be enhancers. You could see how they could work together, particularly in the financial space. But I haven't quite thought about how blockchain could help maybe reel in some of the misinformation from AI. So I think that is a very interesting perspective, and again, another opportunity for things to work together.
Thank you so much for that. And I think it's a great, I think it speaks to what I personally find was one of the motivations, and Clara and others know this, is we really wanted with this series at WIIS to clarify or specify beyond crypto, because often people think blockchain and they go right to crypto or cryptocurrencies, and we want to broaden that conversation. I also very much appreciate the discussion in this last question about provenance, which is something I think about a lot when I worked on illicit antiquities, smuggling and trafficking. And so this idea of ownership history and to be able to check or verify data quality, data hygiene, the trail of all of these activities that we're talking about. So I digress. I'm just very excited that we're starting this series and that will continue. So I would again love to thank our outstanding speakers, Lauren from WIIS, Ambassador Sparber, Clara, Perianne, and Lisa for sharing their expertise and their amazing insights. Today's discussion really reinforces an important point that public trust is not simply a technology challenge. It is a governance challenge, a partnership challenge, and ultimately a leadership, or as we said, human challenge. The future of financial technology, blockchain, and trusted digital systems will depend not only on innovation, but on collaboration across governments, industry, civil society, and international institutions. So you're part of this because you've joined us for this discussion. At WIIS, we are very much committed to advancing inclusive dialogues around emerging technology, security, governance. And we are very grateful again to the Embassy of Liechtenstein for their partnership in helping to convene this really important conversation. Thank you again to everyone on the call for joining us today and those that are watching the recording. We look forward to continuing this dialogue. I am going to pass it now on to Lauren to close us out and talk about our September event. So thank you again to our speakers and have a great day.
Just to conclude, I want to say this conversation really is only the beginning. We are very pleased that the event launches a continuing partnership between WIIS and the Embassy of Liechtenstein, focused on public-private partnerships and building public trust in financial technology and supply chain systems. You've heard many teasers today, but I can provide you a little more detail. Our next step will be a larger half-day summit in September here in Washington, bringing together policymakers, technology leaders, financial institutions, civil society organizations, many of you in the audience, to explore the future of blockchain, public trust, and digital governance. I think we will move to, today was sort of a higher level discussion on the challenges and opportunities of blockchain. September is about understanding and identifying practical solutions, examining governance models, public-private partnerships, digital identity, which we've heard a lot about today, financial integrity, cyber resilience, and the policies really needed to build trust around digital ecosystems. We hope that many of you will join the conversation as we continue to explore this topic. Before we close, I really want to express my sincere gratitude to the Embassy for its partnership and commitment to advancing this important dialogue. And Clara, Guerra, we are especially grateful to you for your vision, collaboration, and support in helping to make this event and the broader series possible. I would also like to thank our outstanding speakers and your contributions, which has given us much to think about as we move forward. Clara, thank you for your thoughts on strengthening the integrity of digital finance systems to advance blockchain as a global good for all of us. Perianne, I thought your perspective on blockchain as the ultimate financial democratization tool was important, allowing everyone globally, equally, and securely to engage in financial transactions. And Lisa, I would call you a digital technology diplomat. I really appreciated your practical recommendations to bridging traditional financial services and blockchain regulators and industry. And finally, in conclusion, I want to recognize Layla Hashemi, whose hard work, planning, and dedication were instrumental in organizing today's event. As always at WIIS, we are deeply grateful, Layla, for your leadership and efforts. And with that, we will conclude our panel. Thank you, everyone.